as we share all of this information, I want you guys all to make a lot of notes, okay? So I'm going to share this. I'm going to give you a little bit of an idea. And what I want you to pay attention to is real estate prices. The gold line is USA and the blue line is Canada, okay? This line, the red one right here, is interest rates, okay? What I want you to notice, as interest rates come down, real estate prices go up. Okay, this is very, very important to understand. As interest rates come down, real estate prices continue to go up. Okay, why is that? Does anyone on the call want to share with me? Why do you think as interest rates go down, real estate prices go up? What do you think?
The cost of the borrowing is quite high.
Cost of borrowing. Juliana nailed it. The cost, as interest rates go down, the cost of borrowing also goes down, meaning they can borrow more money. Now, I'll give you an example. If you go and you qualify for a mortgage, let's say of 800,000, are you gonna even look at a house that's 600,000? Never. You go straight for the 800,000. Okay? So as interest rates came down, the rates went up. My father got his first mortgage and it was at 12%. Imagine getting a mortgage at 12%. This was in the 90s. Okay? Now look at what happened to real estate in USA in 2008. It crashed. Okay? But Canada, it kept going up. Why is that? When the financial crisis happened in USA, Canada actually lowered their interest rates. So they pumped up the market. They didn't allow it to crash. Okay? So this is very, I would say, important to understand. Now, I want you to write down some things if you want to understand the real estate market. There are two factors that affect real estate the most. Another thing I want to mention to everybody is most real estate in Canada is bought with a mortgage. People do not buy real estate with cash. They buy it with a mortgage. Two things affect mortgages the most. Number one is average income. And what I want you to understand about average income is average incomes have mostly remained the same over the decades. Okay? Whatever someone used to make in the 90s, more than likely they make about the same today. Okay? In fact, it's even worse. Before in the 90s, usually the husband would go to work, the wife would stay at home and take care of the kids. In today's economy, this is not possible. The husband and the wife have to go to work, both of them, just to survive. Okay? So average incomes have remained the same. Second factor, I want you to write this down, interest rates. Okay? As interest rates have gone down, you are able to borrow a lot more money. So I'm going to give you an example. Let's say we're in the 1990s. Okay? And interest rate on a mortgage is 12% and your income is 50,000. You're going to walk into the bank at 50,000, 12%. The bank is going to give you, let's say, $300,000 mortgage. Okay? And mainly the houses around that time used to be around 300,000. Okay? It was about $250,000 to $300,000 in Canada. Now, over the years, the interest rate is no longer 12%. Just 2 years ago, the interest rate was almost zero. Almost zero. So you walk into the bank 2 years ago, and let's say you get a 2% mortgage or a 3% mortgage. The same income of $50,000 does not give you $300,000. It now gives you $800,000 mortgage. So it's not that the house looks better. It's, in fact, I would argue houses built 20 or 30 years ago were built far better than the ones that are up now. The houses up now are like cardboard houses. The beams are this thick. In my old house in Delta, the beam used to be 4x4, not a 2x4. It was a 4x4. Okay? The house is still standing. You think the houses are going to be standing that are built in 30 years today? Absolutely not. Right? So, very important to understand that interest rates heavily affect. This is why everybody is looking at the Bank of Canada. I hope they lower the rates. I hope they lower the rates. Okay? So, average income and interest rates are very important to understand. By the way, what is happening to average incomes now? With inflation, the purchasing power of people is getting destroyed. Okay? So average incomes are continuing to go down and interest rates are starting to go up. Okay? I'm going to show you how interest rates can affect. So remember this, for real estate, two factors are very important. Average income, because that's what they get a mortgage on. And then the second factor is interest rates. Now, I'm going to continue here. Have a look at what the mortgage rates over the last about 30, 40 years have been. Mortgage rates used to be around 19 to 20% in Canada. That is like buying a house on a credit card. That's not going to work out real well. My father got his first house in the 90s, and at that time, he got his first mortgage at 12%. Okay? Last few years, by the way, this is 2013, this is about where mortgage rates came down. So you look at how the prices of real estate went up over the last 30 years, and you look at how interest rates came down. Now, let me ask you a question. If interest rates hit almost zero 2 years ago, how much lower can they go? They can't go much lower, right? They're not going to go much lower. So we hit the peak of real estate prices just 2 years ago. A lot of people that bought 2 years ago, they already lost 20% on their properties. They're no longer able to sell because they'll sell at a loss. And they're no longer able to hold the house because the interest rates went up and their mortgage payments doubled or tripled. Okay. Now, let me show you another idea right here. Mortgage payment calculator. Those of you who are on this call, all of you after this call can actually do this. Go on to TD Bank and you can actually go on to their mortgage calculator and you can calculate how much a mortgage actually costs. Okay, so I'm going to go here and I'm going to show you exactly how much a mortgage costs. Let's say somebody borrows $800,000. And let's say we do a 5-year fixed at 4.74, okay? 25 years amortization, and we are not getting life insurance from the bank. And I'm going to show you why. If you borrow $800,000 for 25 years, your mortgage payment is $4,500 a month. Okay? I'm going to do a simple calculation for you. I'm going to pull up the calculator and you will be shocked with this calculation. If I can use the calculator, 1 second. Let me just pull up my calculator here. It doesn't want to work. 1 second. All right, can anyone help me? Can someone do 4,535 times 12? I'm going to share my screen again. Can someone do 4,535 times 12? How much is that? I'm going to actually share my screen here and I will show you exactly how much it is.
It's going to be 54,420.
So for that $800,000, you're paying $54,421 per year. Juliana, can you multiply that by 25? Remember, the amortization of the mortgage is 25 years. Juliana, can you unmute yourself, please?
Yes, it's gonna be 1,360,000.
So over 25 years, you borrowed 800,000 from the bank. Over 25 years, you are going to end up paying $1.36 million for that mortgage. Okay? You are paying $550,000 more than you ever borrowed. By the way, that mortgage payment of $4,500 a month, does it cover your property taxes? Right? No, property taxes are not included in that. Okay? Does it cover your home insurance? No, that is not included. Does it cover maintenance on your property? No. Does it cover utilities? No. So who is this product good for? You know, if I was a bank, I'd be jumping up and down. I got a guaranteed loan, and I'm gonna loan you 800,000, and I'm gonna make $1.36 million. Is that a good deal for you and your family? I don't think so. Right? I'm gonna share my screen again. 1 second, guys. Let me just get out of this screen sharing. I'm gonna go back to our presentation. So this is why it's so important to understand how a mortgage works. Most people are happy just getting a mortgage. They didn't even look at the paperwork. How much do you really pay for that mortgage? Okay? Let me show you something else that is extremely terrifying. Okay? Can you see the bond market? US 10-year treasuries. If you know a mortgage broker, call that mortgage broker tomorrow and ask them what happened to mortgage rates over the last month. They all went up, regardless of the Bank of Canada or the Federal Reserve lowering rates. Fixed rates still went up. Look at what happened over the last month to 10-year treasury bonds from USA. And by the way, Canada is the same. Canada treasury bonds also went up. They went from 3.6% to 4.2%. This affects everything. It affects mortgages. It affects credit cards. It affects everything. All the rates go up when the treasury notes also go up. Okay? I'm not going to share why treasury notes go up today because the call is going to go a lot longer than we need it to. But maybe one of these calls I'll share how treasury notes work and why they affect mortgage rates. But just know this. They went from 3.6 to 4.2 in the span of a month. In 1 month, they went up that much. Okay? Now, another idea I want to share with you is understanding how a mortgage really works. By the way, when you make a mortgage payment, you're paying two things. You're paying principal and you are paying interest on that mortgage. Here is how a mortgage payment is structured. In the first 5 years, 80 to 90% of your payment does not pay the principal. 80 to 90% of it is just interest. Because the banks are smart. They know in 5 years to 10 years, you are going to sell the property or pull the equity out. Okay? And guess what? When you refinance your mortgage or when you sell your property and buy a new one, what happens to your mortgage term? It starts from zero again. You will meet many Canadians who are 50, 60, 70 years old and they still have a mortgage balance. That mortgage should have been paid off in 25 years. Why do they still have a mortgage? Why? Because they don't understand how a mortgage works. This is extremely important. Now, another thing is, what can I do? If I have all this knowledge, what can I do? I want to share something with you. Remember, the mortgage payment was how much? $4,500. I'm going to show you what you can do with $4,500. All of you can do this. I want you to go on Google, type in compound interest rate calculator. Let's say the mortgage payment is, let's say it's 4,500. Let's say you go and rent a place for $2,500 or $3,000, and you start investing $1,500 a month in the stock market, S&P 500, the NASDAQ. Let's say you're putting in $1,500 a month. Instead of it going to a mortgage, you're still renting somewhere. The outstanding money is going towards the investment, just $1,500 a month. And let's say you're getting an average rate of return of 10%. Okay. I actually want to show you what my client is actually getting. I'm going to show you a real life client. Now, if I go here, here's one of my clients. This is a real client of mine. He has a TFSA with me. Okay. Last year, his rate of return on his investment was 37%. He got almost 40% rate of return on his investment. Over the last 3 years, he's getting 18% per year. Net fees. Okay. So remember, we were sharing. Can you see Juliana, can you see the interest rate calculator again? Okay.
Yes.
Now, let's say we're doing a 10% rate of return. Interest is compounded yearly. In 25 years, this person will have $1.86 million cash. $1.86 million cash. Okay? Remember this. They still had a place to live. Right? They retire with $1.8 million. The other couple, what did they do in 25 years? They barely paid off a mortgage. They paid $1.36 million to the bank. Yes, they paid off their house. Okay? But remember, in 30 years, what kind of house is that going to be? Barely standing. Okay? So this is why understanding real estate and understanding mortgages and understanding investments is so important. It is crucial to your success in business. Juliana knows in the last 3 years, I warned so many people of, hey, if you get into real estate, here's what's going to happen. Your payment's going to rise. Mortgage rates are going to go through the roof. And a lot of people, actually, the very people I warned, don't get into it. The bank took their house. They went up for renewal and the bank said, hey, sorry, you don't have the income now. We are not going to renew your mortgage. They took the house, foreclosed it, sold it, and that couple actually lost their entire down payment. They lost $200,000 and they lost an extra $200,000 because the property went down in value. They lost $400,000. That couple wanted to have another child, another baby, can't afford it. They packed their bags, they left to Calgary. One mistake can ruin an entire family. Debt is not funny. Debt is not something to play with. We encourage people to save money and invest and grow their wealth, not to get into liabilities. Now, the next thing I want to share, and this is very important, is what is a mortgage insurance and why you should have life insurance versus mortgage insurance. A couple of different things. I want you to start talking to people that have a mortgage and ask them, do you have mortgage insurance included? Most people do. Okay? And here's a couple of different differences. When you have life insurance through the bank owns the policy, not you. The bank owns that policy. Another thing, premiums are not guaranteed, right? When you get a policy with us, your premium is guaranteed. It's going to remain that much, okay? Another thing, as your mortgage declines, your coverage also goes down. So if you started today with a $800,000 mortgage, tomorrow your mortgage is worth $400,000, You're only covered for 400,000, but your payment remains the same. What a ripoff. With us, if you get $1 million mortgage, 20 years down the line, it's still $1 million. Right? Another thing I want to mention, the beneficiary of that policy is the bank. The beneficiary of your policy is your family, your kids. Okay? And another thing, the moment you change your lender, you have to reapply for that mortgage insurance. What if you're no longer insurable? You're not going to get that coverage. Okay? Whereas with this policy, it remains with you. No matter you go to TD, no matter you go to BMO, it will remain with you. And then the biggest and the most important part, you are not covered through the bank. The bank does something called, I want you to write this down in your notebook. The bank does post-claim underwriting. Post-claim. And what that means is when you pass away, then they're going to decide were you covered or not. They're going to order your doctor's file, and then they can look at any decision. They can make any excuse to deny that claim. Oh, you weren't covered anyways. Okay? And I want you to write this number down. 3 out of 100 claims through the bank gets paid out. Only 3% of claims. This is not something I made up. This is by the CBC News. 3% of claims get paid out with mortgage insurance. With us, 100% of claims get paid out because we do something called underwriting at time of application. When you apply, the insurance company will decide, are you insurable or are you not? This is why it's so important to understand how the banks really make money. And I will tell you this, if you ever want to fail in life, do exactly what the average person does. You are guaranteed to fail. If you want to succeed, do the exact opposite of what the average person does. I hope today you learned how real estate works and why it goes up and why it goes down. I hope you understand today what treasury bonds are, and they are actually what make mortgage rates go up and down. Also, I hope you understand today the importance of investing. You're putting $1,500 a month into an investment, that's $2 million for your retirement. 2 million, right? That's huge. Now, Juliana, I want you to end off the call. I want you to share your own experience with mortgages, with all of these products as well. So, Juliana, the floor is yours.
Good evening, everyone. It's not really excited topics to share today, actually, especially about mortgage insurance or sharing personal stories. As you mentioned, some of your clients that had a situation where they lost the house. So I had a couple situations in my own family where we lost the house. Okay, so the first one scenario was my father died without life insurance, and the house was taken away by the bank. So they took the down payment. They took the house. They sold the house on the market. And of course, my little sister have to leave Canada, and she never back to Canada since then. Been 6 years, just because my father was not educated, didn't know that he need to have a proper life insurance. He was planning, but never got it on time. And by the way, healthy people are nowadays dying as well. So unfortunately, and another situation, that was my personal situation where I owned the property and I had the mortgage insurance and disability insurance through the bank, where I end up questioning them when I need to make a claim toward disability insurance. And there was a lot of headache, by the way, because I find out that actually I'm not protected. Why? Because first of all, the mortgage broker that did my mortgage actually did also the insurance in the bank. By answering 4 or 5 questions, yes or no, That's what actually I got it without even knowing that. And also I was paying quite a bit as well. It wasn't free, by the way. So when I actually asked to make a claim toward disability, they mentioned, oh, you have to wait 3 months. We have to file a claim, see if you're eligible. We have to do underwriting, all of this. And by the way, it's not going to be your income replacement benefit. You're not going to replace your income. You're actually going to just get payments for your mortgage, right? Monthly mortgage payments, which is not too much, right? So, but how about the rest of the money? Who's going to replace those, right? And in the end, I didn't even get those. So, and second, the life insurance, when I start asking questions about life insurance to make sure they're going to pay out or not, none of the question were answered to me. What they they give me a phone number to contact customer service and find out in my own if I even have a coverage and how it works. So when I get proper knowledge, actually I start asking a proper question, and I get so frustrated because I feel like I was fooled for over 7 or 8 years without knowing the basics, right? So questioning the bank, it's not going to help you much, to be honest, because they don't want to answer your questions. First of all. Second, they're not insurance agent. So what kind of answer they're going to give it to you, right? So now I know way more about it. And of course, I always refer the client, for example, if they're planning to buy the house and they don't want insurance, for example, they don't want a life insurance because they're not actually buying a house today or tomorrow, they're planning. So the question number one, I actually creating in their mind, and I telling them you can go to the bank and you can ask those questions. But question number one, I ask, do you want to pay more for cost of insurance or less? So because cost of insurance is actually attached to your age. So the older you get, the more you're going to pay for cost of insurance, right? So everyone say no. So why do you have to wait until you buy a house? Why don't you get the first life insurance and then buy a house? Second question, they will say, oh, I don't know how much I'm going to purchase for. What if I purchase for 1 million or 800,000? Great. You know what? The balance they're going to remain after the mortgage pays out, right? It's going to go to your family. Would you be happy that extra money will be left for your family? And they say, yes, of course. So third question, I ask, would you like to have underwritten plan where they check your health prior payments, right? To make sure that you didn't pay this money like for mortgage insurance and you never get paid the claim. And they say, of course, I want to make sure that I'm paying for something and the claim will be paid out, right? Do you know your expiration date of your insurance, mortgage insurance? What if you buy another house, right? What kind of life insurance do you have through the bank? Is it for term 10, 20, or whatever? What is the expiration date of your life insurance? Are you aware of that, right? And is it your premium guaranteed, right? Or is going to go up later on? No one wants those surprises, right? Who will receive the benefit, the bank or your family, right? Would you get money back if you cancel your insurance, if you pay off your mortgage, or let's say you sold your house and you move away to another country? Would you get money back? And third, tax advantage. Also, my favorite one, can your life insurance create a tax-free retirement? Have you ever heard about this strategy? Do you know that the proper life insurance can create your retirement for your future and also assets for the next generation? And can you transfer the ownership to someone else? So those key questions, it's so important. Ask 3 questions. You don't have to ask all of them. Ask 3, 4 questions, and the client will start thinking and they will understand, okay, and go to the bank. I always send a client to the bank. Go to the bank, ask those questions. If you can not get answer, come back to me. If I was wrong, then go to someone else. Okay, go
Amazing.
back to your firm with them.
All right, that's her own experience right there. So another thing, I just want to go over our recognition again. We have so much happening in our team, and I'm so excited. We have people passing their exams.